In this video, I'm going to be talking about the recently passed Renters Reform Bill of 2025, how that impacts you, whether you are a landlord or an investor. This is a seismic shift in the rental market here in the UK, and you're going to want to know how the changes might impact you and your portfolio or your decision making. So stay tuned because I'm going to be covering everything you need to know about the recent Renters Reform Bill. As a property agent, especially a bespoke property advisor, we work with landlords from across the world to help them build a portfolio or achieve their real estate goals, whatever they might be. For many of our clients, it has included buying London property and that we help them buy and look after it. After years of consultation, the Renters Reform Bill officially became law last week, marking one of the most significant overhauls of the private rental sector in decades. First off, there's going to be the Section 21 no-fault evictions have now been abolished. Secondly, all tenancies become periodic from day one, which means that there's no longer any fixed terms, and once you put a tenant in place, they're on a rolling month-to-month lease situation. There's no term to that lease anymore. There'll be new possession grounds for landlords who genuinely need to sell, move, or address serious tenant breaches. That will be the mechanisms in which they can get their property back. There'll be a new national portal with mandatory registration for all landlords, and there'll be a housing ombudsman to help resolve disputes without lengthy court proceedings. The government's intent is to improve the tenant security and accountability, which is a positive in principle. But for landlords, this means more regulation, more scrutiny, and less flexibility. After years of increased taxation, compliance costs, and fluctuating mortgage rates, many landlords understandably feel that this is one more obstacle in already challenging investment environment. As far as the market update, the London property market highlights through the third quarter 2025. Let's give you some key data that might give you a better sense of where the market is as of right now. The average asking price in prime zones 1 and 2 has fallen about 12.4% year on year to around 2.54 million or £1,500 per square foot. Sales activity remains subdued, down nearly 10% on year and below the 6-year average, showing that while sellers have become more realistic, buyers are still in control. In truth, London remains a buyer's market, and it has been ever since Brexit fundamentally shifted the city's global appeal. We've seen a sustained downshift in foreign and international investment, and that has materially affected both pricing and transaction levels. London is still a world-class market and always will be, but the international capital that once fueled its premium growth hasn't returned in the same way. Buyers are negotiating firmly with achieved prices sitting around £1,300 per square foot, a meaningful discount from asking levels. So while we might be seeing some stabilization, we're definitely not at equilibrium yet. What I'm hoping for, and what many in the market are watching for, is that recalibration will finally allow price growth and confidence to rebuild over the next few years. But certainly this recent Renters Reform Bill changes are going to make it that much more challenging for those who are considering an investment strategy. So let's talk about what this means for landlords and investors. When you combine a buyer's market with tightening rental legislation, strategy becomes everything. For landlords, this is the time to evaluate your portfolio carefully. Which properties still deliver strong yields after mortgage and compliance costs? Which ones might be better off sold while capital values remain relatively resilient, especially if you've held it for a long time? For investors, this is actually where opportunity emerges. Cash-rich buyers or those with long-term horizons can now secure assets that just 18 months ago would not have made economic sense. And when sentiment turns, as it inevitably will, those who acted now might be likely to benefit the most. At Onyx Property Team, we act as a fiduciary advisor, guiding our clients with data and insight and empathy. I used the word fiduciary, and some might not know what that means, but it really fundamentally means that you're going to put your client's interests above your own, and that's something we take very seriously. We recognize that our clients trust us to look out for them, especially when their portfolios are in another country and they're abroad. So we want to make sure that we are driven by data, looking at the information, educating our clients, but also making sure we prioritize what's important for them. We help landlords and investors make strategic decisions, whether that's optimizing their current portfolio, managing compliance, or identifying new opportunities. We can offer some of the following services, which includes portfolio and yield analysis, buyer representation and off-market access to properties, full-service property management, as well as refurbishment and value-added advisory, supported by the Keller Williams franchise and global network that connects us to agents in over 50 countries. So, to sum it up, the Renters Reform Bill is transforming the rental landscape. The London property market remains a buyer's market, with prices still recalibrating post-Brexit. But we're hopefully moving towards a point of true equilibrium, which could set the stage for sustainable price appreciation in the years ahead. If you'd like to explore how to position yourself, whether to protect yourself and your assets or to take advantage of the current opportunities, let's talk. If you've got any questions, please don't hesitate to reach out or to follow me on my other social media channels where I post daily information about the London property market and living in this incredible city. I'll see you on the next video.